Well, good afternoon, everyone. Welcome to our monthly educational series in today's webinar calling Raising Capital with Conscious. My name is Lyle Martin, the CEO and founder of Springboard Equity. Before we get started with introductions, just want to provide a couple quick updates as you'll see some slides going through. First is our legal disclaimer. Briefly touch upon that. Just around disclaimer, liability, and indemnification. And then secondly is around questions. I would ask as the webinar goes on, if anyone has any questions, you'll see on the right-hand side, you've got a chat box. Please enter your question in there. At the end of the presentation, we will have some time for some Q&A. So please do that, and we'll gather those questions accordingly. We're very excited about today's presentation. And many of you may have seen our presenter on different YouTube videos, TED Talks, or various other webinars. Very accomplished, Mr. Jeff Cherry. He is the managing partner and founder of the Conscious Venture Lab. The Conscious Venture Lab is an early stage business accelerator with the goal of developing companies and leaders who embrace capitalism for the good of society. He is also the CEO and managing partner of the Porter Group. And the Porter Group is a strategy consultancy and also a private investment bank that also helps companies become and think about conscious capitalism around their business strategy and their enterprise moving forward. So we're very honored and excited to have Jeff talk to our group today. And again, if there are any questions, please type them in as we go on the right-hand side. We will be gathering those. If you cannot hear what I'm saying or you're having some technical difficulties, everything is voice activated through the webinar, so make sure your speakers are working accordingly. And at this point, I'll turn it over to Jeff. Thanks, Jeff.
Thanks, Wally. Thank all of you for joining as well. So let's get right into it. As Wally said, my name is Jeff Cherry. I'm the managing partner of the Conscious Venture Fund and the executive director of the Conscious Venture Lab. For just a little bit of history, I was a management consultant for about 20 years and sold that company in 2006 to start a hedge fund after working on a couple of books talking about the ideas of conscious capitalism. One is called Conscious Capitalism. It was written by John Mackey from Whole Foods and my friend Raj Sisodia. And the previous book, a book called Firms of Endearment. We'll get into what that all means. That's just a little bit of bona fides. But I left the hedge fund in 2013 to form the Conscious Venture Lab because I wanted to work with early stage businesses to help them think about how to create a different narrative about the way. So that's what we're going to do. So next slide, please. So what is conscious capitalism? One of the things that Wally and Lyle want me to talk about. So really, it is a matter of choice. So let's talk about those choices. Next slide, please. So I like to use this quote from George Carlin: most people work just hard enough not to get fired and get just enough money not to quit. That's sort of a look at the status quo where things are. As we all know that satire and comedy based in reality. Let's take a look at where we are from a real standpoint. Next, please. Please. So for about 15 years, the Gallup has been doing a poll of employees. And for about that long, the results of that poll have been pretty. As you know, we're running about 15 to 20% of employees through all across industries, different sizes of companies that are actively engaged in the company, which means that they're really sort of engaged in the organization. The other 75 to 80% are either not engaged or actively disengaged. And not engaged means they really don't care, and actively disengaged means they're actually trying to sabotage the company. Next slide, please. Gallup, in addition to that, they've done a poll about trust of big business, and we find that only 22% of Americans trust in big business. So we don't love the places we work, and we don't trust the companies we work for. Next slide, please. And finally, this is a crazy stat that someone brought to my attention not too long ago, that you're more likely to have a heart attack, according to WebMD, on Monday morning than at any other time during the week. So we don't like where we work, we don't trust big business, and actually work is killing us. That, to me, sums up where we are in terms of the status quo. Next slide, please. So how did we get here? Next slide, please. Some of you might even know this date, September 1370. Something really momentous happened in the world of business and society. It was a New York Times article written by a guy named Milton Friedman. I'm sure you've all heard of Milton. Next slide, please. And Milton Friedman wrote in that article that there's one and only one social responsibility of business. That's to use its resources and engage in activities designed to increase its profits, so long as it does so within the law, essentially. And from that point on, up until today, essentially, we've been locked in this debate between the purpose of business, about the purpose of business. And that debate has set up most of our stakeholders, employees, suppliers, community, against shareholders. So we've created this myopic view of the purpose of business. Next slide, please. And I think that view and that idea of the purpose of business has really plunged us into a crisis in capitalism. Next slide, please. It's given us things like collapsed factories in Bangladesh. Next. Exploding oil rigs in the Gulf of Mexico. And all of this, lots of it anyway, is because of this notion that the purpose of business is really just to serve shareholders. Next slide, please. There's I picked up this this cartoon from the New Yorker, which I always laugh, but I think sort of gets to the point of where we are. Yes, the planet got destroyed, but for a brief moment in time, we created a lot of value for shareholders. Next, please. At the same time, we know capital is really the most powerful force of human cooperation ever created. It's given us the 3D printing. It's lifted millions of people out of poverty, provides clean water and food for people all over the world. So the question is, next slide, please. How do we get the upside of innovation without the downside that's being wrought by the greed we see from this notion of the purpose of business? Next slide. That's where we come to this idea of capitalism. Next slide, please. So what is conscious capitalism? We asked that at the beginning of the webinar. So really, conscious capitalism is a new narrative about the purpose of business. And it suggests that the actual purpose of business is not to create value simply for shareholders. Rather, it's to create a mutual exchange of value amongst all of your stakeholders. I often tell people that I've created a venture capital fund based on the foundational premise that business is not, the purpose of business is not to create value for shareholders. The purpose of business is to create value for society. Next, please. For your employees, suppliers, your communities, and your customers. And if you do a really good job at creating value for society, you'll never have to worry about making money. Next, please. So Raj Sisodia, I talked about in the beginning, writes in Conscious Capitalism when framing this new narrative that business is good because it creates value, it's ethical because it's based on voluntary exchange, it's noble because it can elevate our existence, and it's heroic because it lifts people out of poverty and creates prosperity. And I think that the notion is that's the way that business ought to be. It's not the way that business is always practiced. And the ideas around conscious capitalism are to try and engage business so that we're operating with this mindset on a more consistent basis. But this is not really new. As you see, Peter Drucker said this a long time ago. It's management's responsibility to make whatever is genuinely in the public good become the enterprise's own self-interest. And what we surmise is that since that time in 1970, when Milton Friedman made his famous statement, that we've moved further and further away from this as an idea, that business and society ought to be mutually beneficial to one another. And the notion of conscious capitalism is trying to get us back to that. Next, please. So in practical terms, what do we mean when we talk about the notions of conscious capitalism? Well, essentially, there's 4 tenets that we look at, and at the Conscious Venture Lab, what we do is we invest in early stage businesses, and we train them generally how to create a business, and we inject into that this idea of these 4 tenets, that really the purpose of business is to serve society, and that's the foundation of any business. And that businesses are build a culture of employee and customer focus and constant learning, that these businesses have leaders who genuinely lead out of a sense of service to others, and they manage for all stakeholders without a myopic focus on shareholders and a myopic focus on financial return. Of course, as a that there's a paradox there, that those businesses that focus on shareholders to the detriment of all of the other stakeholders that are required of that business to create value, oftentimes create less value for shareholders. And those businesses, and we found this in my consulting work in the hedge fund and now in the venture capital and the accelerator business, those businesses that are focused on answering different questions about the relationships and how do I get my employees to give a damn about this place? How do I get suppliers to feel like partners and not like servants? How do I get communities to welcome me in and not put up barriers to entry? And how do I get customers to understand that I have their best interests at heart and this is about a relationship and not a transaction? That the businesses that focus on those questions first generally are more successful than their counterparts. Next slide, please. So why should you care, right? That's this is we're moving into a new realm, we think, but sometimes we're asked that should I care about this? Well, next slide, please. We think that you should care essentially because in a lot of ways it's the right thing to do. Now, pay equity and respecting suppliers and caring for the planet, treating customers like humans and not inputs. We just simply think that's the right thing to do. Some people will say, well, sometimes, it might be the right thing to do, but really, if you're going to have a business, you need to make money. So are those the only reasons why I should care? Well, we think there's lots of reasons that you're going to have to care. Next, please. I'm not sure if any of you remember this, but a couple of years ago, Bank of America, that they were going to start charging their customers $5 to take their money out of the bank with their debit card. And the response to that was really telling for us, that customers essentially revolted. This bank was focused myopically on shareholders, and they were essentially tweeted into submission. Next slide, please. So we think that this notion of the purpose of business to serve society simply is something that's gaining ground in certainly in the United States and in other parts of the world. That there are societal forces at play. The notion of social media and the transparency it creates, the aging of society, those societal forces are driving this to be a must-have capability. And there's one other thing that I think all of us understand, or I've heard this time and time again, one word that drives this home. Next slide, please. Millennials. This is now the largest cohort. Next slide, please. In the United States, we talk a little bit about the numbers here in terms of millennials. Depending on the source you look at, somewhere between 30 and 60 trillion dollars with the T is going to be passed to millennials over the next decade. Only 29% of those millennials are taking over their family's funds, keep their family investments, which means over are firing their family's investments. Really, really, it's a tidal wave that's coming in the investment management business, and they're trying to get their heads around this. More than 50% make a habit of buying from companies and causes they care about. As I said, they now make up the majority of the workforce. And almost as tellingly, only 20% of the millennials intend to stay at the businesses they're currently working at, if those businesses put financial performance before anything else. And I also know, as business people, that can be deadly for a business if 80% of your employees, the largest cohort of employees in the marketplace, are going to leave their current jobs if their companies are simply focused on the bottom line. So we believe that because of these societal forces, this is a must-have corporate capability. Next slide, please. Let's talk about a few other numbers then as well. Next, please. The evidence that these businesses, because of these forces, outperform is pretty overwhelming. So there's been a bunch of studies. One was done by a couple of professors at Harvard that looked at the performance of people-focused companies versus bottom line or profit-focused companies. And the numbers are pretty astronomical. 72% higher, those with higher employee engagement, the earnings were 70% higher than those with employee engagement. People versus profit side, as you can see on the slide, revenue growth, stock price growth, employment growth, net income, the numbers are pretty staggering. Next slide, please. This slide represents some work that we did for Raj's first book, Firms of Endearment. And it's interesting to note about this book that Raj is a marketing guy, and he started out really answering one simple question. Tell me about companies that you love. And he started a research project at his MBA. He was at Lee College at the question, he kept getting the same answers. And he was thinking about, so why do people love these companies? So that's what he was investigating. This chart here came after the fact, after he identified those companies, to see, well, everyone loves these companies. We wonder how they perform. And finished this research on the analysis of their performance, we were actually pretty shocked. But this is, so we have the numbers about millennials and we have the numbers of performance. So not only is this a must-have capability if you want to attract customers and you want to retain employees, but we believe it's a must-have capability if you want to show financial performance. Next slide, please. A couple of more data points that SAS, these are a couple of companies that we call exemplars of conscious capitalism, if you will, and a study was done at Harvard that showed that SAS probably saves between $60 and $80 million a year with 12,000 employees because of their low turnover rate, and that low turnover rate is all based on the culture of that organization. Seth Goldman from Honest Tea is a very good friend of ours, a friend of the movement, and Honest Tea, but they may not know, he outsold Nantucket Nectars in less than 10 years, all based on the notion of he was going to run his company with a culture, of love and caring. So, next slide, please. So, what would you do if you want to sort of follow in the footsteps of some of these exemplars, as we say? Next, please. Well, first, we think that it's really important to articulate your purpose. Purpose as the foundation, as I said earlier, we started a venture capital fund on the foundational premise that business is not about creating value for shareholders. It's about creating value for society. And that's about articulating your purpose. Next, please. As our friend Simon Sinek says, people don't buy what you do, they buy why you do it. And this is becoming more and more evident every day, that people want to understand what your company stands for. They don't care if you make money. Obviously, you have to make money if you're going to be successful in business. Ed Freeman, who's a friend, who's a professor at Darden, always makes an analogy which I think is very helpful. Thinking that the purpose of business is to make money is just like thinking that the purpose of your life is to create red blood cells. If you don't create red blood cells, I'm not a doctor, but I'm pretty sure you die. But I would say that's the purpose of my life. Just like the purpose of your business has to be bigger than simply making money. And that's what attracts people to you. So we think the first thing to do is really get clear about the purpose of your business, why you started it, what you hope to achieve in society. Next, please. I think the next thing is, after you articulate purpose, is how do you bring that purpose to life? And really the way you bring that purpose to life is by the culture you create in that organization. So building a culture of service and a culture, an external and progressive culture, is one of the most important things that we see in all the companies that we train and invest in. Next slide, please. You've probably heard this: culture eats strategy for breakfast. It's really attributed to Peter Drucker. We're not, he actually said it, but we know that it's true. And one of the greatest is silence. Next, please. Southwest Airlines, for years and years, everyone in the business can see what we do. And if they want to be successful like we are, they can copy it. They can have the same planes, they can have the turnaround time, and love them or you hate them, you know exactly what they do. But he's also said that's not the key to our success, because that stuff is easy to copy. And think about this. In the airline business, which is a business that's pretty much universally hated among businessmen because of how, regulations and fuel and how difficult it is, and it's a very, very complex business. Southwest Airlines has only had one unprofitable quarter in its entire history. Herb Kelleher says that's because the business is not about the things that people see, it's about the culture that we've created here, a culture of caring, a culture of love. They didn't pick that ticker symbol, LUV, by accident. The keys to culture: be deliberate about the behaviors you care about. We think that culture really is nothing more than that set of behaviors that we will accept and that set of behaviors that we will not accept. Both are important, and we think that once you get your head around that idea that culture is about behavior, that they can be measured, and therefore it can be migrated. And once you start measuring, you have to make decisions about that. So be deliberate about behaviors you care about, measure them. Fire when they're not present may be the most important thing that I can say today. We see time and time again where companies espouse a culture, and everyone in the organization knows that there are a group of folks that do not abide by, or do not believe in, do not live that culture. But management turns a blind eye because they're financial performers, and nothing will kill culture faster than that. And also praising those behaviors when you see them. Those are really, really important components of developing a culture, making it real. Lots of organizations say we have a great culture. The first thing we ask them is, okay, do you do behavioral interviewing? And if they can't answer that question, they're letting culture happen to them instead of driving culture. And as we all know, we don't want to let things happen. Next slide. What are the benefits to all stakeholders? Next slide. We think that this whole notion of conscious capitalism really helps us as leaders create what I call a mindset of abundance. So if you think back to Milton Friedman and the only responsibility of business, now we have this mindset of scarcity. So it's shareholders versus everyone else. If I pay my employees more, I have to take that money away from shareholders. about this as a concept. Two businesses that we've studied a great deal, Walmart and Costco. Wall Street for years has said, don't invest in Costco. They run that business like a private company. Walmart is where you want to be if you want to be in big retail. The only problem with that analysis is it's just not right. And one of the reasons that Wall Street hates Costco, or has for a long time, is because of their pay practices. They say they pay their people too much. They pay them, like it's a private company. That's not their money. That's shareholder money. But Jim, the CEO of Costco, says, well, that's not exactly true. We care about employees first. And our notion is if we take really good care of our employees, pay them well, train them well, treat them well, they'll do a great job with our customers, and therefore our shareholders will benefit. And that's proved to be true. So he's taken off what we call the shareholder blinders and allowed him to find new paths to value by next slide, please. Communicating with investors. Next, please. We can't stress this enough, especially if you're an early stage company, if you're out raising money right now. Be authentic and tell your real story. Investors really do care about what you care about, even though they may say that they don't. They will, if they care about your story, they will find ways to rationalize all of the other things that they tell you they care about in terms of your business model. You have to do those things. You have to understand how to create financial value through a business model you've created. But really, investors, like anyone else, really do care about your story and what you care about. So we say be authentic, tell your real story. Don't give in, speak to power. And this is really important because you have to attract people to you that believe in the same things that you do in order for you to really be able to execute on your business model. Live your values, demonstrate how these values, you have to do the hard work. These values translate into long-term gains, for all of your stakeholders. We think if you do those three things, that you'll be able to attract the right investors. Next slide, please. Because really, there's nothing more than who doesn't understand or agree with your values. We tell companies all the time, the torque steer of regular money, regular Wall Street money, if you are trying to operate your business from a values or mission-driven perspective, will pull you off the path because they have a short-term mentality, and they aren't willing to wait for things like employee improvement and employee engagement practices to take hold. And if you really care about building long-term value, those are the things that you need to care about. Next slide, please. So this is sort of a list of what we call some of the exemplars in the business of businesses that have built their organizations like this from day one and from the ground up. And as you can see from this slide and these logos, almost to an organization, they are among the best in their industries. Next slide, please. So I'm just going to end with this. I'm a little behind, I think, but I wanted just to put this up here and give you a sense of why we think this is important at the Conscious Venture Lab. We exist to answer sort of this one question: what type of world could we create if companies, executives, and investors cared as much about people as they do about profit? People ask us, does that mean that we don't care about profit? And of course, the paradox is the more you care about people, the easier it is to generate profit. So I will leave it there and open it up to turn it over to Wally. I think that that is the end of the presentation, but happy to take any questions that anyone might have.
All right, thanks, Jeff. If you didn't send in your QAs yet, please do. And Michelle, if you don't mind marking the ones that are QAs with as a QA, I'll go ahead and handle those and give everyone just a minute to get those in. Okay, we've got. I'm going to go ahead and start. Any questions that aren't answered on the webinar will be handled offline, and Jeff will be glad to talk to you in more detail about those. We'll also send out information on how to reach Jeff personally in case you're interested in inquiring about the Conscious Venture Lab in more detail. First question is this something that small companies can do, or is this only something you can do once you're successful?
Yeah, it's a great question. I actually left the hedge fund world because we determined that this is something that it's imperative for small companies to do. That it's not about spending money on different initiatives. It really is about a mindset of how you're going to build your business, the types of people you're going to hire, really the type of the way that you're going to create your business model. In fact, if you're a larger business and you've grown up with the old paradigm, the University of Chicago sort of mindset that everything revolves around the shareholder, it's actually much more difficult to change. So we think this is imperative for early stage businesses to really understand and build into their business model.
All right, great. We have a question from Leah. Do you have an accelerator program coming up?
We're probably going to announce our next program, which will be held in Baltimore this fall, and it will be in one of three industries. It will either be in the food business or what we're calling smart living, which is IoT, health tech, smart tech, wearables, smart cities, or in cybersecurity. So if you keep an eye on our website, you'll see an announcement of that.
Okay. I think that answered another question they were asking if you only work with healthcare. Quick answer to that is no, but healthcare does happen to have a lot of conscious ventures within it. We have a lot of entrepreneurs at Springboard that have very conscious mission in their business. Caesar would like to know, what is the mission of Conscious Venture Lab?
Well, Caesar, I think the Conscious Venture Lab, what we're trying to do is create the tech stars for conscious capitalism. So what we see out in the early stage, early stage accelerator startup ecosystem is really a lot of focus on the product and a lot of focus on the innovation. And we think that there are really a lot of smart technologists out there that really aren't focused on creating businesses that are going to actually serve society by the way that they interact with society. So there are lots of great products out there, Uber, Airbnb, the innovations have made life much easier. But the question about how those companies and others interact with suppliers and employees and communities is another really, really important question. So our goal, our mission, really, is to change the way that capitalism is practiced in America.
Great. Got a question here from Carlton. Starts with a comment. We are witnessing a growing sense of fear, scapegoating, and xenophobia among society. What is the implication of this on conscious capitalism and its tenets?
That's a really, really great question that I could talk about for about 3 hours, I think. I think that what we've seen with Brexit and what we've seen happening here in the United States with the presidential election has a lot to do with how globalization has left behind the middle class of wealthy economies. So here in the United States, in the UK, there was a chart, I think it was in the Wall Street Journal and New York Times just recently, that showed if you took the entire world and you segmented it, into quintiles, and you show based on globalization where the gains in income had happened. Lots of gains in income at the lower level, so lots of new jobs in India, lots of new jobs in China, right? Lots of new jobs in the emerging market. Lots of new income in the upper level, so in the 1%, the 1/10%, shareholders, business owners, executives, CEOs, lots of gains there. the gains in the middle class and wealthy countries were minute. And I think this is part of what you're seeing. This is part of the pushback that we're seeing. I think this directly is attributable to what's happening with Brexit. And I think that in some ways we're not going to address this with the solutions that we're looking for. So the middle class is looking now for political solutions to that, right? We see a lot of nationalism, and we want to have trade barriers, and that's not going to solve the problem. What we ought to be saying is, why weren't organizations, companies thinking about distributing that income more equally across all sectors of their organization, right? Instead of outsourcing everything, right? So Kevin Plank here in Baltimore is really focused on bringing manufacturing back to the United States. That's not a protectionist or a nationalist, if you will, idea. It's an idea that there are a lot of people in Baltimore who don't have jobs and who need jobs, and we can manufacture things right here. So I think it has really, the implications are massive, but it's going to take a lot of work to get it right.
Great. Thanks, Jeff. Steve has a clarifying question. It looks like he wants to confirm if this is about social impact investing and social impact businesses.
No, well, no, yes and no. Not in the traditional sense, Steve. So the traditional sense of a social impact business is a business that has decided to solve a societal, social, or environmental problem in a for-profit circumstance, in a for-profit framework. We love those types of businesses, and we invest in those types of businesses. But I always tell people, we don't care if you're solving the water scarcity problem or making plastic forks. Every business ought to operate with a stakeholder mindset or a conscious mindset, answering those questions, those 4 questions that we posed earlier about how do I get my employees to care about this place? How do I get suppliers to feel like partners, communities to welcome me in, customers to understand we're in a relationship? It doesn't matter what you do, what you're doing in that regard. It matters how you're doing it. So this is much, much bigger than the social impact investing space, right? Because we think that every business can be an impact business. Southwest Airlines is an impact business, not because they're solving some huge societal or environmental problem, but because of the way they run that airline. Hope that makes sense.
Thanks, Jeff. That was great. Since we have only 1 more minute until when we promised everyone it would be done, we're going to wrap it up. If you have any other questions, it looks like there's a couple more. Jeff will get back to you offline, but feel free to write those. And you can email Jeff directly if you see it on your screen here, jcherry@Conscious Venture Lab. Also, if you have questions about Springboard Equity and how we can support you as an entrepreneur with your equity crowdfunding raise, or if you're seeking broker placement services, we'd be glad to talk to you about that. Or if you're an investor curious about how to get involved with the companies on our site, glad to speak to that as well. So any of this stuff can be handled offline. We'll go ahead and send also a replay out to everyone, and feel free to share this. The mission of both Conscious Venture Labs and Springboard Equity is democratizing entrepreneurism through these types of events and helping educate people to make the right decisions for successful and responsible businesses and investments. So we'll make that available. You'll see an email come within the next 24 hours for the replay. And again, you can reach us on info@springboardequity.com, jcherry@Conscious Venture Labs, or visit us on our websites and reach us that way as well. Really appreciate everyone for the time. Jeff, I really appreciate you coming on with us on this event. And Lyle, do you have any final closing remarks?
No, I appreciate it. I think fantastic presentation. Thank you, everyone, for your participation and the questions. And we will certainly get the replay out. And as Wally said, please feel free to share this. I think we all have a joint interest in, entrepreneurship, within this space, and looking forward to continued growth. So, thanks again, Jeff.